everyone, welcome back. So far we have studied about the single candlestick reversal patterns or pause patterns like doji or spinning tops or bottoms. Now in this video we are going to start our studying about the double candlestick reversal patterns. We will begin with the bullish and the bearish engulfing pattern. They are mirror image of each other. Now, to begin with the bullish engulfing pattern, it occurs after a downtrend. First, there has to be a defined downtrend, and after that, a candle should open and there should be a red candle formed in the continuation of the bearish trend. On the next day, the candle should open below the close of the previous candle. Remember this point. Not below the low, just below the close of the previous candle. And if this candle closes above the red candle's body, that is the open of the red candle, the close is there, then it is called the bullish engulfing pattern. Why engulfing? The body of the second candle, the green candle, engulfs the body of the red candle that is there, and due to that a bullish thrust is created. What happens? Earlier there was selling pressure, but on this particular engulfing creation day, the bulls take control, and even though the price opens lower, their buying pressure or demand puts the price much higher, and the close is above the opening of the previous day. Now, a confirmation of this pattern is generated when the price moves above the high of the two candles that create the bullish engulfing pattern, and the stop loss should be below the low of these two candles. So here for entry and stop loss we are looking at the highs and lows, not only just the bodies, which are the basic criteria for creation of the pattern. Now once the price moves above the high of the two candles, we enter the trade with the stop loss that we said, and then we should trail the stop loss as the move goes on, because we are not quite sure that till what extent the up move should continue. Now for a bearish engulfing pattern, what happens is that first there should be an up move, then there is a green candle, then there should be a big red candle whose body engulfs the body of the previous green candle. And then if there is a break within next one or two candles below the low of these two candles, then one should take a short trade with a stop loss just above the high of the two candles. And as the down move unfolds, someone should maintain trailing stop loss. Now we should give you, or we will be giving you two examples of the bearish engulfing and bullish engulfing pattern. But remember one thing, that these two patterns are quite common in the market, and these are quite reliable patterns. The reliability comes from the body engulfing the previous candle that completely changed the scenario of demand and supply. In a market where derivative positions are there, especially, there are always quite huge positions. So if a candle is formed in which the body is engulfed, a lot of people are stuck, and if then the price reversal happen, people normally try to book their losses. In that kind of a scenario, the reversal occurs more smoothly. Now let me show you two examples. Here we are looking at ICICI Bank weekly chart. Here we are looking at the 2016 beginning period, and as we can see, after a very big sustained down move, a weekly candle was formed, and this was bullish engulfing pattern with these candles. This was a small red candle, and here big green candle engulfing the body of the red candle. And as it happened after that, the stock never looked back as the price moved above in the next two candles above the high of this two candle pattern, and then an up move started. The price retraced later to the support zone, that is the high close to the high of the pattern, but then again moved higher and higher and higher. So this was an example of a very good bullish engulfing pattern. Now I will show you an example of a bearish engulfing pattern. Here we are looking at the Nifty chart, and here we are looking at a Nifty weekly chart. Here you can see that in Nifty 50, in the beginning of the 2018, there was a bearish engulfing pattern formed in the weekly chart, and you can see the kind of down move that unfolded after that. This was a great example of a weekly chart and bearish engulfing pattern. And if we find that after bearish engulfing or bullish engulfing during the reversal, the volume is increasing, we can be pretty sure about the up move or the down move that is unfolding, and we can then remain more assured, and we can trail the stop loss just to maximize our gain and part book profits as and when the move unfolds. So this was about the bearish and bullish engulfing pattern. In the next videos, we will talk about more two candlestick bullish and bearish reversal patterns. Thank you very much for watching the video.